Okay, so certainly something I've seen recently, and it's been building. Definitely, there's a trend, probably since early 23, is this diversification within a pod structure. So, for example, there was a time when most startup equity PMs would mainly be trading just startup equities. Nowadays, I'm coming across a lot more groups and teams where a PM that used to focus on global startup as people within their group that trade FX or equity vol or commodity spreads or like some sort of rates strategy like RV. And this is all under their own, let's say, allocation. Why is this happening? Likely because of just diversification. I think that there is a ceiling on how much returns and capital you can run without starting to bleed alpha, reduce Sharpe, or overfit risk. The second is volatility. Because there is more volatility in the market, having some ability to offset drawdowns and to see alternative uncorrelated streams of returns within that pod, prevents underperformance. And in fact, what it does is just boosts your resiliency and adds a lot more dynamism to your return structure. So it's less about, do I know better than the rest of the market? But it's about how do I stack return streams that don't break altogether. And I think that's an important mindset that is differentiating, let's say, the pods that are doing really well and being able to maintain performance and resilience over time to those, let's say, PMs that perhaps are moving from one platform to the other and trying to figure out why things aren't able to deliver on the stated expectations. So I think this is definitely a change that we're seeing in the market, and I expect it to continue. I think some firms still do want to hire specialists. They do want to hire people who have full conviction in a specific vertical, perhaps with, let's say, 10 or so years deep in that domain. But definitely we're seeing more from allocators, from business development executives, from heads of trading groups, interested in people that are able to again build diversified streams of returns and be able to sort of understand how they all interact and understand whether going down the route of being completely specialized outweighs the balance of having a more resilient alpha portfolio. So I think there's a place for both, but certainly it feels like there's an increasing amount of PMs that are sort of spreading their allocations and starting to think about how to stand up to just some of the unpredictable markets that we're experiencing today. Be interested to hear your thoughts, whether you're seeing the same, whether you're thinking about this yourself, whether you see that as a path forward to where you want to be in terms of building your own book. Get in touch.